Good morning, traders. It is Wednesday, March the 27th. Taking a look at the morning charts, we got the US dollar index. You can see this morning we're starting to see it move higher. It looked as though it was trying to put in a little bit of a topping pattern there. Overall, the uptrend has remained intact, and you can see here we're popping to a new high this morning. The last couple of days we've seen the price pop up, consolidate here at resistance, and again this morning we're seeing the US dollar start to break out and continue its trend up. Now if we just flip to a longer term chart here, be able to see where we'll just jump to the weekly chart, get a big picture where we are. We're still trading up here. We still have quite a bit of distance to travel here before we hit new highs and break this previous pivot high, so we are still trading up in a resistance zone. Overall, the price remains pretty bullish. This is the first pause on the weekly chart for the US dollar index, and what that kind of points to is there's still potential for it to really continue to surge to new highs and really take off. Now if we zoom back a bit more, you can see the big range we're in, and if you do just a simple measured move, you take this move up, a small consolidation, you take that move up again, it brings us pretty much right up to this trend line, and also right up near this resistance zone, this upper end of this channel. So it could be interesting to see if that actually reaches. If that happens, it's gonna keep some pressure on stocks and commodities, especially precious metals. Of course, the strong dollar this morning is putting some pressure on commodities, mainly silver, and a little bit on gold, which I'll cover in just a minute. Now let's just take a quick look at crude oil. Here's the crude oil chart. Yesterday it popped up, had a nice explosive move, extending higher. In pre-market trading it had a little pop up, pulled back, and yesterday we actually saw it pop right up into resistance, came right and tagged our mid-range here right at the 96.40 level, touched that yesterday, and now it's starting to pull back. We had some pretty strong volume backing it up. I think there's a lot of short covering going on. We saw it really pop up, and now it's pulling back. Of course, a stronger dollar is also putting a little bit of pressure on crude oil here. Now taking a look at natural gas. Natural gas had a little bit of a bearish flag yesterday. Overall, I'm not a fan of this chart. It's kind of giving off mixed signals, and we're steering clear of it. Yesterday had a strong pop back up and continues to hold up right up near the highs. Overall, I'm avoiding natural gas for a while. I'm not a fan of the chart. And again, zooming way back here, you can see we're overextended to the upside. We're breaking above new highs. We're also kind of grinding out this resistance zone here, and I don't really want to get involved with natural gas at this point. It could have either a very large extension to the upside, or it could have a very sharp pullback. It's really not a pattern that's that tradable. It really just jumps around. Take a look at precious metals. You can see here this morning we've got gold's been pulling back the last couple trading sessions. This morning it's down a little bit. It's only down about 0.2%. Nothing significant, but overall it is still pulling back, and this is the type of pullback that it could pick up speed. And a lot of times when we see this pullback in gold, you'll see it. Gold usually picks up speed near the end of a move, so it'll kind of roll over, and then eventually, of course, we've got a little spike low here. If it breaks that low, that's when we could really see it pick up speed and actually have a quick drop. And we're going to find key resistance right through the middle of this noise, which is right through this consolidation, this longer consolidation. We had a pivot low here, and just looking at this move, if we break this low, we'll probably see it come right back down to the 1575 area. Looking at silver. Silver's down the most today. It's down 1.6% right now. You can see it's starting to fall out of bed, pick up speed to the downside. It's testing. It's coming right down to test these pivot lows, and there is potential. If we just go to a longer term chart here, let's go to the weekly chart and take a look here. Overall, it's pretty clear that next major support zone is going to be right across these bottoms here, which we're still a little ways away from. If we zoom in a little bit to get a closer view of where that price range really is, we're looking at the 26.50, 27 level before it could really pick up speed. And a simple measured move here is we've got a down move, bear flag, and you take this same distance down and it could bring us right down to these lows going forward again, right down to the 2650 area. So silver could be picking up speed. You can see we've still got strong volume, strong selling volume. We had a little bit of a bounce and pause on lighter volume, and then we've seen some strong selling volume again. And today we could really see it ramp up and see another big down day or down. This is a weekly chart, so we could see another big down week on silver for high volume also. Taking a look at the miners. If you look at the gold miners here, they were down yesterday, and they continue to bleed out and really continue to form red candles and drift lower. We really want to see it break these previous lows, and we want to see it pick up a little speed. Once it breaks that, we want to see it create more of a panic selling spike. Really, favor for gold miners has really fallen off the charts, and most people are becoming more and more bearish and just getting out of the play. I think if we see one more low or a couple more days of lows breaking this previous low here, I think we're going to see the favor really fall out, and everybody's going to give up on them, and I think that's when we're going to see a bottom put in place. I know a lot of people are trying to pick a bottom down around these levels here. Really, we need to crush that dream one more time, and for everybody to finally have tried to pick a bottom, 5 or 6 times and get stung each time. And I think by the looks of this price chart, we're at about one more drift lower here, and to put everybody in a losing position one more time. And I think that this chart is showing the emotions that that's all it should take, is one more new low, and that should just get everybody out of the market, and we'll be looking to actually get into the market. Taking a look at the SP5, or sorry, here's the bond chart real quick. Bonds are up really nice today, having a big pop because equities are pulling back, precious metals are pulling back. We're seeing money flow into bonds. And of course, money's not really flowing into precious metals today because the US dollar has had a strong pop to a new high. So we're seeing the strong dollar effect really hurt precious metals. And that's only leaving really two safe havens. That's the dollar index and bonds. And we're seeing bonds jump up here about 0.5% this morning. We are coming back up into a previous resistance zone, which are these previous highs right across here. Wouldn't be surprised if it more or less stalls out from this level. If we see the equities market break down and actually start to roll over, then we could see bonds explode to the upside. We could actually see more or less this range right here from the high to the low. We could see that extend to the upside. So there is good potential upside on the bond chart. It could be forming some type of bottoming basing pattern here, but we really need equities to fall out of bed and break down and start to roll over for that to happen. Now, yesterday I pointed out on the SP500, I'll just pull up the SP500 chart here. We got a dollar sign just showing that there was some panic buying in the market. More or less we saw price action and everybody kind of piling into the trade, put the market into an overbought territory. Whenever it gets to that territory, it gives the market a reason to pull back. And this morning we're seeing a pretty sharp pullback in the equities market. We're going to be actually trading lower than yesterday's candle. We're going to gap down somewhere down around this purple line at this time anyway. Still the trend remains intact, but with this overbought territory yesterday, we did raise our stops, put them at this pivot low to protect us, because we don't want to see prices just break down and start a big sell-off. We want to be able to get out before a big sell-off actually takes place. So that's kind of where we stand with that. Now, if we take a look at the futures chart of the SP500 this morning, you can see where we're trading. Overall, we've had a series of rallies, pullback, rally, pullback, rally, pullback. Yesterday we had another rally, and this morning we're starting to get another pullback. It looks as though we're about halfway done. A pullback this morning, if not possibly even more. Just looking at the recent pullbacks, we've had sharp pullbacks about, just looking at the line overall, just the length. You don't have to look at points or anything, just the overall length. This pullback this morning looks to be about at the halfway point for most of these declines. So we're potentially at the halfway point. If that continues, it would bring us back down here to the 20-day moving average, which will act as support. And it's also still going to keep us on this support trend line, bouncing up price. We'll still have a higher high, higher low, and overall price action continues to hold up, but if it does start to break down from here, we could see a very sharp correction going farther. And depending how price starts to play out here in the next couple of days, we may actually start to move our stop up to various pivot lows here to reduce risk in case we do see a meltdown and prices collapse. But again, overall, right now, if you look at the price action, we are trading pretty much right across the board here through key support. We've got a bounce here, pivot low, pivot high, consolidation, breakout, consolidation here, breakout. So we are coming right back down. This is a key pivot point where we are now, which is one of the reasons why price is stalled here. We've got a lot of volume traded right through this level, and with any luck it'll act as support, and we'll see price move up and form some type of little handle or launch pad here, and then we can see prices eventually break above these highs, and we'll see the equities market explode higher for a couple of weeks as we go into April. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.